Good day, Junior Techies. We are going to look at fixed assets activity number 3. In this activity, we are going to focus on completing the fixed asset or tangible asset note. So we need to solve all of those question marks. What we're going to do in this activity is we're going to break it down into bits and pieces so that you can understand exactly how we get to the answers. If I look at the additional information in respect of the fixed assets, they provided me with all the necessary information on the land and buildings, the vehicles, as well as equipment. So this is an overview of all the information in respect of the fixed assets. If we start now with land and buildings. Please remember, land and buildings are always shown at the historical cost. Historical cost is a GAR principle that we use. And why is it at the historical cost? What is the historical cost? It is always at the original price. If our buildings, if our property is valued at, for example, 5 million, we're not going to say that the value of our property is 5 million. We are going to be conservative. We're applying prudence. We are going to say the cost, the historical cost of that building is 3,452,000 in the beginning. So it is the original price. So when I now need to solve calculating what is the additions, because they said to us, an extension to the office block was undertaken during the year. They don't even need to provide you with that information. And why do I say that? Disposals at carrying value was 0. I can see if I compare the balance in the beginning with the balance at the end that there's an increase. That increase means that there were additions at cost. So looking at our calculations, I'm going to start with the balance in the beginning, plus additions is the question mark, minus the asset disposal was 0. And then they provided me with the balance at the end. So the difference, if I take the credit minus the debit side, equals the additions at cost. Moving on to vehicles. The business had 3 vehicles in the beginning of the year. The following details appeared in the fixed asset register on the 1st of July 2020. So, looking at the information provided, they've given to us in the tangible asset note, the cost in the beginning minus the accumulate in the beginning equals the carrying value. Now, if I look at a fixed asset register is an individual record of all my assets. So if I take all 3 of those vehicles and I add the cost, it is exactly the same as the cost in the tangible asset note in the beginning. If I do exactly the same with accumulate and I add all of that, it will give you exactly the same answer, 458,600. And if I do the same with the carrying value, it will equal the same amount in the tangible asset note. And again, what is the reason for this? The fixed asset is an individual record of all my assets. The fixed asset note is a summary of my assets. So it should balances. So take note, what are they telling us now about the vehicles? Vehicle number 1 is old and is reaching the end of its useful life. And vehicle number 3 was sold at its carrying value of 102,800 during the year. Please take note of how different the information is presented than what you are used to. They've now told us individually all of our assets. So it's clear from here that we've got vehicles that is old, that it's reached its lifespan. We're going to look at that now specifically. We've got vehicles where we need to calculate what was the depreciation for this financial year with vehicle number 2. And then we've got asset disposal with vehicle number 3. So starting with the first one. The cost accumulate and the carrying value is given to us. Again, it's said that it reached the end of its useful life. Now, please remember, they don't need to tell you that. You always need to check the carrying value in the beginning. If you look at the depreciation policy, it's 20% on cost. So if we take the cost in the beginning and we times it by 20%, it equals 48,000. This means that my depreciation is more than the carrying value. And we can never have the carrying value being a negative amount or a zero. So when this happens and when they tell you that it reached the end of its useful life, it means that we need to take the carrying value in the beginning, which is 15,000. We say minus depreciation equals the carrying value at the end. It can never be a negative, it can never be a zero, so then our carrying value at the end should be 1. So to find out the depreciation for the year, we take 15,000 minus 1, and that equals 14,999. Please be careful with this one. You should actually always check. If I calculate the depreciation, if we add it to the accumulated depreciation, will it then be more than the cost, yes or no? If the answer is yes, then it means your carrying value at the end should be 1. So then we always subtract 1 from the carrying value in the beginning. And that will be your depreciation. If your answer is no, then you're going to calculate depreciation normally by taking the amount times the percentage times the months. Looking now at vehicle number 2, again, the depreciation policy, 20% on cost. So to find out the depreciation, this is an easy calculation. We're simply going to take the cost, which is 352,000, and we're going to times it by 20%. Looking now at vehicle number 3. They provided us with the cost, accumulate, and the carrying value in the beginning. And then they said to us, vehicle number 3 was sold at its carrying value of 102,800 during the year. So, how do we approach this? Number 1, you should know that the carrying value will always appear in your tangible asset note. Disposal at carrying value. So this is an example where we didn't make a profit or a loss on the sale of the asset. So that 102,800 can immediately go to your tangible asset note, disposal at carrying value. But now I need to work out my depreciation for this accounting period. But the problem is now they didn't provide me with the date on which this asset was sold. So to solve this problem, calculating the depreciation, I'm going to open up the asset disposal account. Always remember, step number 1, take out the cost to the asset disposal account. What was the cost? 280,000. Step number 2, update your depreciation, which I cannot do because I don't know on which day I sold it. Which means step number 3, I cannot take out the total accumulated depreciation because I couldn't update it, so I don't know what's the total. What I do know is that we sold it, step number 4, at carrying value. So there is no profit or no loss on the disposal of the asset. So what can I solve now? I've put together all the pieces in the asset disposal account. So the balancing figure becomes now accumulated depreciation. So if we take the debit side minus the credit side, the total is 177,200. Now, if I look at the accumulate in the beginning and I've got the accumulate at the end, we can work out our depreciation for this year by taking the difference, and that is 14,000. So again, you can use the T account if you want to. You don't need to. What you need to understand is I had to take the balance at the end minus the balance in the beginning. And this comes down to understanding your basics. When we calculate depreciation, it's always added to the accumulated depreciation account. So if I've got the balance in the beginning and I've got it at the end, I can calculate the depreciation. So now to find out what is the total depreciation on vehicles. On vehicle number 1, we calculated it 14,999. Vehicle number 2 was 70,400. The third vehicle was 14,000. So my total depreciation on vehicles is 99,399. Looking now at equipment. Equipment of 116,000 was purchased on the 1st of December 2020. No equipment was sold. Equipment is calculated at 15% per annum on the carrying value. The carrying value means diminishing balance method, book value. How do we get the carrying value? We take the cost minus the accumulate. So now, with equipment, remember your checklist. We always calculate depreciation on that which we sold plus the new plus the remaining. So if I have a look at my timeline, the accounting period ends 30 June 2021. It means it starts the 1st of July 2020. On the 1st of December, a new asset was purchased, equipment for 116,000. So to calculate the depreciation on the new, it's always from the day we purchase it until the end of the accounting period, and that equals 7 months. So the depreciation on the new is 116,000 times 15% times 7 divided by the 12. Please take note again. I've used the cost of the equipment, although they said it's on carrying value. When I'm calculating on the new, it's irrelevant because it's the first time we're calculating depreciation. There wouldn't be a book value. But to calculate on the old, the remaining, we have to calculate using the balance in the beginning. What did we have for 12 months? So this is now easier to solve. Why? They provided me with the carrying value in the beginning. I don't need to calculate it. So I simply take that times 15%. So my total depreciation on equipment is 22,650. So now that we've looked at all the calculations in detail, we are going to complete the fixed asset note, and we're going to start with buildings. So just a reminder with buildings, we simply take the difference by taking the cost at the end minus the cost in the beginning. You could have also taken the carrying value at the end minus the carrying value in the beginning. And the difference is the additions at cost. Vehicles, we had an addition at cost 0. Disposal at carrying value was given to you 102,800. The total depreciation we needed to work out on vehicle number 1, 2 and vehicle number 3, and the total was 99,399. So now to get the carrying value at the end, I'm going to open up a T account. And the reason why I'm opening up a T account, again, we can use this method when we're doing cash flow statement later on when we're working out the investing activity. What was the purchase of non-current assets and what was the proceeds from the sale of the asset. Even if we also need to calculate the depreciation. So I'm planting a seed and I'm going to give it water every single time. So by the time we get to cash flow statement, you will have a better understanding. So if I take the balance in the beginning, plus additions, minus disposal at carrying value, minus the depreciation equals the balance at the end. So if you're not sure how to do it directly on your tangible asset note, you can always open a T account. If I look at equipment, we had additions at cost. It was given to you, 116,000. Disposal at carrying value was 0. Our total depreciation on equipment was calculated at 22,630. So now to solve the carrying value at the end, we're going to take the beginning plus additions minus asset disposal minus depreciation equals the balance at the end. Thank you very much. I want to leave you with this quote: success is the sum of small efforts repeated. I hope you have a wonderful day, and please watch our next video. We're going to do another activity on fixed asset and tangible asset note. This is so important to understand moving forward. Goodbye.